Alrighty, we'll get started, everyone. Thanks so much for logging in and waiting. And most importantly, thank you so much for joining us for our second webinar in our Amfin webinar series. It's so great to see so many familiar faces back again from episode 1, and a lot of new faces too we saw on the registration list, which was very exciting. We definitely knew that this topic today was going to be a popular one. We get so many questions about it. And we'll obviously make the recording live if you want to share with your team, or obviously reference anything back. Today, I'll be aiming to make it as informative as possible. For those that I haven't met before, I'm Tessa Bruce. I'm our Head of Growth here at Amfin. And I'll introduce Alex and Darren, who are joining us today to talk about Beat the Dealer. I do want to preface the webinar by obviously explaining, and I'm sure we're all here for the same reason, that dealers are a really healthy form of competition in the auto space, and also obviously a source that we rely on for leads. So there is a vital role, but today we'll be more ensuring that we all have the right information to be eyes wide open, really educate our clients on what that full sales experience can look like for them, how to secure the best finance, and also give everyone on this call the best tools to explain the difference between dealer finance and broker finance to our clients. So without further delay, I will introduce our panel today. For those that were on episode 1, we have mixed up the style so that today can be a little bit more conversational given the topic. We were originally meant to have Alex Betts, our Melbourne relationship manager, on the call, but unfortunately he's had to go on emergency leave. So we are lucky enough to have Darren Turner as replacement. Darren Turner is relatively new to Amfin. He's our head of sales and experience. He's got over 30 years prior experience in the auto industry, and he may get offended when I call him a veteran, but he really is. Darren, do you want to give yourself a kind introduction than veteran for our audience today?
Yeah, I'm not sure if I should be thanking you for that introduction, but just to give you a bit of an overview, I started off, this will give it away, I started off as a mechanic in the 80s. So a lot has changed since then, but I started off in the 80s and I moved through the service side of dealership world, which introduced me to fleet, which led into sales management, wholesale, and I entered the finance space in 1999. Yeah, I'm not going to tell you how many years that equates to, but it's a lot, and finance is just one of those spaces that I absolutely love. So here I am still doing it today.
Well, our audience, I'm sure, can do the maths on that. If not, we'll tell them later. That's a good overview, Darren. And for those that aren't across Darren's background in full, he spent the last sort of 10 years actually more of a sales and training coach in the automotive space. So he's definitely the one that's probably taught half of New South Wales dealership sales guys how to beat us. So it's good to have you on the other side. Something obviously that you and our other panelists today, Alex Bashara, have in common is that you've both been on the selling and the sourcing side of the car trade. So I'm really looking forward to getting your insights today. So without further ado, our second panelist is Alex Bashara. He's our head of concierge or asset sourcing here at Amfin. For those that have worked with him before, you'll know him as Bashara because he's our third Alex internally. Bashara, can you give us an overview of your experience also?
Yeah, for sure. Thanks, Tess. So look, I've been in the automotive space for a little over a decade now. I started as a cadet at the young age of 20. I can't say I've got quite as many years of experience as Darren, but started at the age of 20, worked my way through new car sales as well as prestige used car sales, through into management and a bit of wholesale as well. And then in the last couple of years, as you said, I've moved over onto the sourcing side of things, using all that knowledge that I learned to help people buy cars.
Yeah, nice. And before we get knee deep in content, do you want to sort of explain to us, Alex, what you're doing with Amfin now in that sourcing space? Because I think that'll help our audience understand probably the context of your views and the different relationship that you have with the dealer versus what our sales guys would have with them.
Yeah, for sure. So I suppose the main difference is I am working quite closely with dealerships. So they're not so much a competitor to me, but also a source of being able to provide for our clients. So I work with our clients to make sure that they're getting the best deal and simplifying the process of buying a car. So working with our dealers to make sure that clients are getting a great deal, getting a car in a reasonable time frame, and obviously just simplifying that as a whole.
Yeah, nice. So I figured the best place for us to start today would probably be, why the session is called Beat the Dealer in the first place. So from where I'm sitting, and I think all of our attendees, when it comes to automotive asset finance, naturally, the dealer is obviously going to be competition when it comes to securing the finance deal, because they're at the point of sale, they're in the client's face, they are controlling a large portion of that deal as well. So Darren, with your experience running so many dealerships, I thought it would be great if you could take us through a couple of different operational models that dealerships have in place, especially around securing the finance aspect. And that way we can understand a little bit more around what's motivating that competition and what KPIs look like, so we know what we're up against.
Yeah, sure. So there's probably two parts to the question. Firstly, the reason why, and then the how. Dealerships are all set up differently when it comes to financial profit centres, as we probably all know. Some are reliant more so on the back end of the business, which is known as fixed operations, that being the service and parts departments. And others, mostly, are really reliant on the finance department results. So to give you an idea, an average car sale profit margin might be 1,000 or 1,100 when the profit out of a finance deal, if we call it that, can sit well over $2,000. So obviously, it's a good business model to be heavily geared in that sense. But all dealerships have finance as part of their sales process. I guess that's a given. The biggest thing to factor is that the salesperson, finance manager, and sales manager, or anyone within that process, are all remunerated on those KPIs. Whether that be paid on the lead per lead that goes through the department, or the total income generated for the month, or penetration per month. So in reality, throughout that sales process, there's a really good chance that there'll be at least 3 touch points throughout that sales process from when they first walk into the dealership. And finance can be discussed as early as the test drive, and in and around that test drive, starting to establish things like budget, what's affordable. If I can fit that car into that amount of money, is that something you're prepared to proceed with? So it happens at different stages right through, but now in the new space, it happens really early.
Yeah, and I think that makes sense, whilst we're trying to make sure our clients get the best opportunity and best financial setup, there's a lot of people there that are hungry and motivated to secure that finance deal as well. So that definitely makes sense. I guess one of the key things and one of the things we talk about most in our one-on-one conversations every day is understanding the difference around how dealerships operate. So as most of you might know, they're not required to have an ACL or the credit license like us finance professionals. Therefore, sometimes that can create an uneven competitive landscape in how deals can be structured. So Alex, do you want to talk us through the basics of those differences?
Yeah, sure. So, look, they are still bound by NCCP and Privacy Act and anti-money laundering and all those ones that we are, but because they aren't acting, they're acting under what's called a point of sale exemption. As you said, they don't need that credit license to be able to do that. So it does give them a little bit more flexibility in terms of how they're writing loans and what they disclose and where they disclose it and all that sort of stuff. One of the biggest differences, obviously compared to a lot of the mortgage brokers who are on the call today, is that these guys aren't bound by bid. So we all know what that's done in terms of making sure our clients are getting the best overall deal possible. And I suppose in terms of just an operational perspective, I was in dealership land for 10, 12 years, and never once did I ever see our finance departments get audited. So sort of compliance is certainly not policed as heavily as it is outside of dealership land.
Yeah, interesting. I do feel like you probably gave me the marketer's version, which is great for our audience, I think, to be able to explain to their clients. But Darren, the veteran, do you want to give us the insider's version? What are some of the tactics you've seen used in the dealership space over the years?
I'm feeling older with every introduction, but thank you. I'm not sure. I'm not sure how to answer this without sort of everyone hating me for it. But there's a lot of seriously dodgy things that do, for use of a better word, that happen within dealerships. I mean, some things that will go unnoticed that just sort of feel like it's part of the process. One example is when you're getting your car valued. They'll take the keys, they'll drive to the other end of the dealership, and those keys won't return until you absolutely go sourcing them for a reason to actually leave the dealership. And they do that just to slow you down. Simply, they want to know that by the time you leave, they've exhausted every opportunity to be able to put you into a car and take delivery of that car ASAP. There's probably two other, really common ones. When you get quoted with a repayment on a specific car, they'll often include insurances and warranties as being part of that repayment. And often, unless you see it early on in the piece, you'll actually drive away with those products without actually even knowing that formed part of your repayment and part of your package, which is a little bit not nice, I guess. And one of the oldest 1980s type scenarios is they pour an absolutely boiling hot coffee so that it takes you about half an hour to drink it, so you can't leave. So they'll do whatever it takes to keep you there for as long as you can, because they're in the business of selling cars. They understand that the minute you walk away, that you're probably not going to return them.
Yeah, I think there's a lot to unpack there, but one of the things that is common between all of those examples is the pace and pressure. They're really crucial factors, and I guess our job as finance professionals is to make sure that our customers are really eyes wide open, and how do we avoid putting them in a situation where they do feel overly pressured to sign something without having the right time to either think about it, compare, or read through it properly. It's quite clear that there's a very different sales style that occurs between broker and dealers. And to me, in a nutshell, the broker conversation is more factual, financially driven. It's around the client's long-term objectives. And typically when someone comes to us, they are asking those bigger questions around rate, repayments, how does this fit into my lifestyle? Whether when they get into that dealership space, it feels a lot about the emotions and I'm here right now and I need this car, and you can get swept up with that. So I thought it might be good, guys, if we can give a comparison of what those sales styles look like. So Alex, if you want to pretend that you're my broker and I'm heading into the car dealership this weekend, how can you better prep me as a client to make a good decision when it comes to financing my vehicle on the day?
Yeah, for sure, Tess. So I suppose when I'm approaching it from this angle, it's, making sure that you're aware that you've got a pre-approval in place, and, making sure to mention that to the dealership when you are in the door. Don't feel afraid to speak to the dealership, get a quote, find out what they can offer you. I suppose the key there is making sure that it is a written quote. And the reason we want a written quote is simply so that, you as my client can come back to me and you and I can sit there together, look at that quote and make sure we're comparing apples for apples. And ultimately you're going to end up with the best deal at the end of the day. And look, we all know what dealerships are like. They tell you we can only do this deal today, and it's simply not true. So don't feel the pressure from them. Yes, you're going to be emotionally attached to that vehicle and that's what they want because that's their job. But remember, at the end of the day, you want to make sure you're ending up in the best place. So feel free to get a written quote, and that way we can make sure we're comparing apples with apples and you'll end up in the best place.
Yeah, and I think that's a good reminder, right? If a client ever comes back to us, of course, we're always going to still look after them. So it's just important for us to not get caught up in that pressure that they're putting on them on the day. It'd be great, Darren, if you want to now play the role of a dealer. How are you going to use emotions to secure the deal from me on the spot?
Yeah, so emotions, exactly right. I'm absolutely going to play on that the whole way through that scenario of closing that sale as quickly as I can. So I'm obviously going to sit you down with the standard questions of, how was the test drive? How did it feel? What did the car smell like? Did it tick all of the boxes? Can you see yourself owning this car? Where would you take it on your first trip? How does that trip feel? And when people are looking at you, how does that make you feel? Knowing from an early on piece in the test drive or around the test drive, we would have probably discussed what the weekly budget is. So I would then move on the back of those positive answers, on the back of how good that car felt. You know, knowing what your budget is and we can fit this car to within your budget, I'd simply ask for your license to move towards an application straight away. So I'm really running on those emotions to move straight towards a close as quickly as I can.
Yeah, and I think, you know, if I put myself in the shoes of the customer, if I'm happy with the car, I'm happy with the repayments, you can see why it is so easy to want to sign up on the day and not stick to that pre-approval. So yeah, it makes perfect sense why that competition is so fierce. We do have some really great questions from our attendees today that have been submitted beforehand, so I thought we could go through a couple of those now. Darren, what do rates look like between broker and dealership at the moment?
Yeah, so the rates are the rates. They're same. I guess the thing to be aware of is some of the things that we touched on, having spent so many years at dealership level, is that they can absolutely add things into the background without you being completely aware at that full disclosure point. So that's something to understand. There's obviously promotional rates and things that do go around from time to time, but look, at the end of the day, the cost of money is the cost of money.
Yeah, and I think what's also interesting is feeling those promos and the pressures. If the client hasn't secured a pre-approval, obviously with us or with their broker, whoever it is that they're dealing with, and then they come to you on a Monday and say, I've got this quote from the dealership. The key thing that I would say is instrumental in securing that deal, or at least being able to compete properly against the dealership, is you got to remember, obviously, what Darren and Alex have just explained is you're such a captive audience as a customer in the dealership. You've sat there quite relaxed, happily handed over all your docs straight away, whether quite often on a Monday when we got on a phone with a client, we say, you know, we need your pay slips, we need your IDs and all of that, and it becomes less of a priority, and they go, I'll give it to you at 5 o'clock when I finish work. So trying to get the customer to be as a captive audience with you as they were with the dealer, so that they can properly compare, that's a really important part, I think, to set us up to compete properly. Alex, do you want to tell us more about the guarantee buyback schemes? I think that's something that comes up quite a bit.
Yeah, sure. So there's quite a few manufacturers who are doing it now. I was with BMW and they were one of the first to introduce it to Australia. So it's been around for quite some time, and everyone's jumping on board. It's essentially, the way it works is they'll ask you a couple of questions around how many kilometers you're planning on traveling and how long you want to keep the car, similar to what we would do as finance professionals. But they'll put that into their systems. You know, BMW will spit out that says this BMW 3 Series after 3 years is going to be worth X amount of dollars. That guaranteed future value acts as a balloon against the car, and we all know how balloons work. So obviously keeps the repayments down for the client and all of that. One thing to note is that, generally speaking, the interest rate's generally a little bit higher than what it could be if you're not doing a guaranteed future value. But that comes back to, they actually offset that by having a higher guaranteed future value. So you can still get those really good repayments. So it's, again, you know, not a bad option for some people, but again, making sure that you're getting that written quote to compare like for like, because sometimes if we were to add a regular balloon the same size, then the repayments may be less.
Yeah, that's fair. Darren, a question that came through from our audience was around how dealerships include insurance in the quotes, and obviously you touched on that before. This specific question was around how can we do the same and compete on an even playing field?
Yeah, absolutely. We can do the same. As at Amfin, we've obviously got an insurance partner that we can set up, you know, a whole range of different insurances. But to keep it simple, if we're just talking about cars, absolutely we can. We have some pretty impressive premiums that go through on car insurance. So there's no reason that we can't do the same. They'll sell that as a benefit at the dealership level, but it's absolutely available to you through our space. And the whole idea through Amfin is that we become, and it's cliche, but we are absolutely a one-stop shop where you come to us and we can not only source the car, but we can also finance and insure it for you.
Easy. Alex, next question that came from our audience was how quick can we respond to a customer? I think it would be good to know in sourcing and in regular financing.
Yeah, sure. So on the sourcing space, it's pretty quick. Essentially, 15 minutes is kind of what we're setting as an SLA to reach out to the client and have that first initial conversation. Realistically, we can get a result within sort of 24 to 48 hours. So very, very quick turnaround in terms of the sourcing space. The finance space is not too dissimilar. Obviously, is a little bit longer, obviously, because there's a little bit more information that we need to gather and all that kind of stuff. But again, very, very quickly. So, the dealership argument of it happens really, really quick. It's very, very similar with us. So it's not really any different.
Yeah. And how many lenders, Alex, do dealerships normally have access to?
Yeah, so it depends on the size of the dealership, but realistically, most of them will have 1 to 2. Generally, maybe a third at absolute max, and that's kind of going to be capping it out for a dealership. But mostly 1 or 2, and that's all they got.
And I think this was probably our most popular question, Darren, so we'll give this one to you. Can commission be hidden in the paperwork from dealerships?
So the legal answer is no, but the actual answer is yes. I mean, again, and we touched on a few of their little tactics that the dealers play in that space. And one of the oldest tricks that the dealers will do is they'll package some of that credit guide information that talks about commission payable to the supplier or the dealership. They'll house that with terms and conditions, and they'll already have that all stapled and packaged together and refocus you in other areas of the paperwork, that being the repayment that you spoke about from day one at test drive, and really focus in and around what you agreed upon in those early stages without drawing attention to obviously those commissionable amounts payable.
Yeah, interesting. And I think rates is such a big one. Most of the time we find clients want to compare against the rate, but there's so many other objectives, which I know you chat with the guys about every day, Daz, that we actually should be looking at. And I think the rates can become comparing apples to oranges sometimes. So we've found internally here the best way to really level that playing field is using an asset sourcing partner. That way we know the true cost of the car is what the car is. There's nothing extra hidden in there. And that way we can assess the finance deal as a proper like for like or apples to apples. Alex, do you want to talk us through that sourcing space and, some of the advantages or wins that you've found to make sure that deals are really transparent for customers?
Yeah, for sure. So you've touched on it right there, right? And making sure that we can treat the sale of the vehicle and the finance as essentially two separate things is really, really key. What you might find is a dealership might on paper make it look like they're selling you a really great deal overall, but when it comes to it and you separate it out through a sourcing partner like ourselves, when we talk to a fleet department, that the price of the vehicle may drop by thousands of dollars, and in which case, by the time you factor in that equation and then you look at finance elsewhere, overall it's a significantly better deal rather than just accepting from the dealership that they're giving you a really good finance rate, but the price of the vehicle is too high. And I suppose that's the main key of what we do is we do deal with the fleet departments in the dealerships, and those guys are versus different to the guys that we've been talking about before. These guys are actually incentivized to sell as many units as possible, and they know that to do so their best chances are selling cars as cheap as they can. So that's generally, traditionally what gives us a better chance of achieving a discount for the clients, and then making sure we can compare the finance with apples, because we know that ultimately the price for the vehicle is the best.
Yeah, I think the motivation makes a really big difference, right? And particular around, obviously, I know the volume of dealerships you've got access to. So it's the difference of a client being able to walk to the 3 different dealerships in their area or have access to all the dealerships nationwide to make sure that they're comfortable. So I think that's really important. We were conscious when we ran this webinar, when we set it up, that we anticipated we might have a lot of questions from our audience. So I'm going to give you the heads up now. I'm going to ask the guys to take us through one more question. So if you do have any questions for either Alex or Darren, feel free to pop it into the chat now, and then that way I can work through those additional questions that our audience has today. So whilst you give us any of those questions, guys, can you give us a recap? What are your top things to watch out for when looking at dealer competition? So if I listen to nothing that you said today, what are you going to tell me?
Darren, age before beauty.
Thank you. Well, I guess first and foremost, absolutely always get a finance quote from whoever it is that you're speaking with in the dealership. One of the things that I say to my guys every day is there's a lot of determining factors that equate the cost of funds, and some of the things that I rattle off are the type of loan, the term of loan, the asset put forward, the credit history of the borrower, and then on top of that you've got rates, fees, and charges. So, at Amfin, we've got over 80 lenders there available to us. Now, if each of those 5 or 6 variants varied, how do you then compare one to the other to equate which is the best deal? Well, the easiest way is through your repayments and your total payables. So, which brings me back to the first point. Absolutely get the quote. Don't commit to anything, but move away from that space where there is a lot of emotion and there is a lot of pressure to tie everything up and get it happening on that same day, and just give yourself some space to work out what is actually the best deal so that you make the right decision.
Yeah, and I think I'm probably just doubling down on what Darren has said. That written quote is really, really important to make sure that you can compare apples with apples. And yeah, a good salesperson at a dealership is absolutely wrapping you up in the emotion, and getting you to make a decision right there and then. So, just remembering to let your client know that they don't have to be rushed by a dealership and they can work at their own time frame, rather than working on the dealership's time frame. And then I suppose, yeah, the third and final is just treat the finance and the price of the vehicle as two separate things so that overall the client is ending up in the best spot.
That makes sense, guys. I think what I'm hearing there is, pre-approval, use sourcing if you can, explain to clients what will happen on the day so that they're really prepped and don't feel pressured, definitely. We'll move on to some questions. We just got one from Julia, so if anyone else has one, feel free to prop them in. And Kerry, if you did have a question, let us know as well, or we might have already answered it. So Julia's question looks to be around how you can refer things into Amfin. So Julia, definitely there's the two models, the tick and flick or the full application. So I can get your relationship manager here at Amfin to reach out and send you some further information off the back of the call. Definitely we do have a lender list. It's also detailed on our privacy, so we'll send that through. Our current lender headcount is 84. So definitely that's a mix between, your banks, your non-banks, and your subprime and private lending as well. So if there is a home, we'll be able to find it for you. Did we have any more questions from our audience today? Oh, here we go. Alex, do you want to answer this one? Do you provide sourcing as a service where no finance is also required?
Yeah, absolutely. So we can definitely still help. Not everyone decides to finance a vehicle, even though we know it is the majority. So absolutely, we can still help. So I'm sure that all of my details tests are going to be shared around after this as well. So when it comes to those ones, guys, absolutely just reach out direct to me. More than happy to help the clients when it comes to searching for new or used vehicles.
Perfect. And Kerry's question was, what assets can the sourcing team assist with, Alex?
Yeah, so right now the main focus is on new vehicles, so passenger vehicles, some light commercials, in terms of utes and very, very light trucks. But the plan is to start expanding that. So if you do have a need for something specific, guys, feel free to reach out again. More than happy to have that chat and see if there's some way of actually utilizing the network that we've already got to help out.
I think you had a forklift the other day, Alex.
Yes, I am currently working on a forklift. Exactly right.
Mark's got a great question. He's found recently that dealers are stalling customers on new cars who have a pre-approval. So when they walk in, order the car, the pre-approval will lapse after the 30 days, and then they can apply the pressure to obviously quickly finance that deal. Have you seen this in your space, Darren and Alex? And obviously, what's the best way we can explain to the client on how to combat that?
I suppose if I take that as what's happening in the market at the moment, it may on some cases be that is the truth, where the dealership is playing funny buggers. What's probably more likely, and the dealers just aren't communicating it well, is that cars actually are being delayed. Boats are being delayed, customs is being delayed. So even though the dealership might want to be able to deliver that vehicle in the agreed time frame, it's simply out of their hands and they're just not communicating that well. But I suppose in terms of combating it, just pushing dealers. This is again where we can come into play. If they are blowing wait times out, it's worth picking up the phone to a sourcing partner to say, hey, what is the wait times on these things? Because this is what we're being told, and is it the truth?
Yeah, and I think it's interesting. There are some really great lender policies at the moment with asset delays and rate rises. Macquarie's one, for example, they'll do a 90-day approval, and then they'll work with us to do a further extension. So there are some lenders where we can get that pre-approval locked in for 180 days mark. So that's something that obviously, if we discuss that with your client up front, we can make sure there's the peace of mind. And that's where we say, let's not just focus on rates, because the rates right now, they might be comparing between, a 7.5 and an 8% rate. But the time that delays happened, the rates are well above the 8. So what they felt was expensive at the time was actually the better option, because we got them the 190-day pre-approval and missed those 3 rate rises. So that's always something that I think is important. Alex, you're popular today. Another question from Lee. How much can you save on average for a new car price?
Look, it's a tough one at the moment. If I had to put a number on it, it's probably anywhere from sort of $1,500 to $1,800 based on the vehicle. There are vehicles out there at the moment that have such popularity and such long wait lists that dealers just simply are not discounting cars. The benefit of where we can come into play is we might be able to source one sooner. But there are other vehicles out there where, if you're happy to wait 6 to 9 months for a vehicle, there are some pretty good deals that are going on. It's kind of done a 180 to what we traditionally used to know, where you used to pay top dollar for a brand new car and get a discount on a demonstrator. It's done the complete opposite now. So
yeah, easy. Daniel's got one just around lender policies and the full application. Daniel, this is one we'll probably need to talk through in a bit more detail, just depending on who you aggregate with. So I'll get your relationship manager to reach out to you straight after this as well, and we can clarify that for you. Renee's got a great question. This one might be for you, Darren. Do you provide a quote without your own credit check, but initially relying on your own credit check for the quote?
So you can, we can give indications as to where repayments would sit, but officially for a definitive quote, it needs to be based on a credit profile. I could tell you that $20,000 today is $100 a week over a 5-year term, but if I dial into your credit, your Equifax, and it's 457, well, there's going to be some higher risk there, which is going to attract some higher repayments. So short answer is absolutely, we can give you an idea or a window that payments would sit in or around, but for specifics, we need to play in this specific space.
Yeah, and it's interesting, just obviously my 2 cents on it. I find a lot of the time that a client wants that instant quote and isn't prepared to hand it over is typically on that Monday morning after they've had the pressure from the dealer. So that's where it's important for us to all jump in, control that properly, and go, if we want to compare the apples to apples, let's properly get that application in. Obviously, the benefit we have with so many lenders is we can go and do that soft touch and workshop it first, so that your client's not going to be at a disadvantage when we do need to go to that extent, but definitely some options there. How long do approvals last in general, Darren? There's one small question in there about that.
Yeah, so normally 30 days, but as you just touched on, Macquarie are at a maximum of 90 days in the current form, as long as nothing changes throughout that 90-day period. Yeah.
And Kevin's got a question just around minimum credit scores that can be accepted. Daz, do you want to answer that one?
Yeah, so a couple of finer details that come in, but anything, well, you can go as low as 350, but there's some conditions on the back of that with maximum amounts that you can borrow. But as a general rule, you're talking about 450, 500 for standard type lending. But, it can go much below that. But once you start playing in the space of the 350s and the 400s, there's generally some more serious items that need to be talked about rather than borrowing more money.
Yeah, definitely. And I think, there are a couple of lenders in that space who don't require or don't base their policy on a credit score at all. But naturally, there are rate differences in those kind of deals as well. Alex, Renee's got another question just around stock delays at the moment. Obviously, we've had some great insight from Hyundai and other dealerships recently around, they're still 3 to 12 months away. Have you got any, quick insights for the group around stock delays?
Yeah, look, I suppose as an average, I'd say that across the board, the wait time is probably between 6 to 9 months for a brand new car. In saying that, there are cars that are around. So if a client is flexible on color and, variant, then generally speaking, we can find them something significantly quicker than that. There are other vehicles that I touched on earlier that are so popular that their wait times are pushed out to 2 years. So as a rough rule of thumb, I'd say about 6 months is about average, but it's also almost changing daily. So it's pretty crazy.
Yeah. And if you're after certain vehicles, good luck to us all.
Quicker you get in the queue, the better.
Yeah. Darren, there's a really good question in here around how to charge brokerage so that we're not overcharging and losing the deal. We obviously have a standard in-house in terms of what we're comfortable with that we think is fair. Is there an industry norm that we can all refer to that we think is the right standard for clients?
Well, I think a cost is relative to the service provided, is my honest opinion in and around that. I mean, if everyone had the same levels of expectations, and no disrespect, we'd all be driving 15-year-old Hyundai XLs in the 3-door manuals that came out at $12,990 and changed the used car space. But we don't. We all have different expectations in what we feel is a service level. And I think that sort of goes hand in hand. And one of the major benefits that at Amfin we try and do is absolutely exceed what the norm is in and around that space. So is there a norm? No, there's not a norm. But on the back of service, there is a norm, and that norm attracts a cost to it. Does that answer your question?
Yeah, I think I'll speak on Renee's behalf, or sorry, I forgot who answered that question. But I think that the standard is, if it's a vanilla deal, it's not going to take long to put in. Generally, we're charging an origination fee, and for a consumer deal, 2% brokerage, anywhere up to 4% for a commercial deal. The more you have to workshop that round, spend weeks on trying to find a home for it, that's where that service has a price, right? So I think that's the best way of breaking that down. What about refinancing of balloons? How easy or hard is that to do at the moment?
Yeah, it's easy. It's really just an update on information, but normally it requires a 12-month statement of repayments from your existing lender, and that's pretty straightforward and can happen really fast.
Nice. That looks like I've covered all the questions in there. If anyone else has another question, feel free to pop it in now. If not, that's perfect. That was the last one. If anything comes through before the end, I'll touch on it. But otherwise, definitely just want to say thank you so much. We knew there'd be lots of questions, so appreciate all of those coming through today. That's probably, looks like, we're nearly on the 45-minute mark. That's probably a good time to wrap up for everyone. Before we do, a couple of follow-up things that we'll send through to you all, just so you can obviously access all the information today. And I know a few people logged in around that 20-minute mark where you would have missed a lot of that content up front. So what we'll be doing is our national team of relationship managers will send you all a follow-up email with the key insights from today, as well as a link to the recording, and obviously some details on how to adopt asset sourcing if you want to. Next month, we will be running another webinar. So it'll be episode 3. It's going to be on sole traders for anyone that's interested. It'll be on Wednesday, October 5th. Obviously, we'll be covering the key difference between consumer and commercial loans for a sole trader client and how to really figure out which one is best. And the details for that webinar will be in the follow-up email also. But that's really it, guys. Thank you so much for joining us. I hope you found value in the session. And more importantly, we hope you found new confidence when it comes to managing dealer competition. And personally, I look forward to seeing you next time. And thank you again for joining.
Thanks, guys.